The Inflation Reduction Act is an extensive bill that tackles climate, healthcare, and tax reforms. Although it became a law in August, most of its programs have started to roll out this year. Now, let's look at what exactly the government is outlining. You can find this one-pager on democrats.senate.gov. This legislation brings about several significant changes. It aims to lower energy costs, promote cleaner production methods, and reduce carbon emissions by approximately 40% by 2030. Now, additionally, the legislation empowers Medicare to negotiate drug prices and sets a cap of $2,000 on out-of-pocket costs, making healthcare more affordable for beneficiaries. Moreover, it lowers healthcare premiums under the Affordable Care Act, benefiting millions of Americans. Now, in an effort to create a fairer tax system, the legislation ensures that the largest corporations and ultra-wealthy individuals pay their fair share by closing tax loopholes and enforcing existing tax codes. Importantly, there are no new taxes imposed on families making $400,000 or less, as well as small businesses. Through these measures, the legislation strives to promote fairness, affordability, and economic equity. However, over the long run, the Inflation Reduction Act would raise marginal income tax rates faced by higher earners and corporations. Now, the distributional results that follow do not include the impact of drug pricing provisions or IRS enforcement on after-tax incomes. Inflation is driven by expectations regarding the likelihood that the federal government will be able to repay its debt over the long term, which is a function of the expected performance of the economy, tax collections, and spending. By reducing long-run economic growth, the bill worsens inflation by constraining the productive capacity of the economy. Though the revenue-raising measures included in the bill are expected to contribute to reducing inflation if they are considered sustainable sources of revenue, there is uncertainty surrounding the projected revenues, and they may end up being lower than anticipated. For instance, past experiences with the corporate alternative minimum tax suggest that revenue generated from the new book minimum tax might decrease over time. Additionally, the bill's increased spending can have negative impact on inflation, particularly during the initial 4 years. This is because the revenue-raising measures take time to fully take effect, and the deficit increases as a result of the increased spending. It implies that the bill's immediate impact may exacerbate inflation before the measures to address it fully kick in. Now, this statement means that if tax credits and healthcare subsidies included in the legislation are anticipated to be extended indefinitely, they can contribute to increasing inflation. These policies create upward pressure on inflation because they involve additional government spending and financial support, which can lead to higher overall prices in the economy. The expectation is that the continued implementation of these policies could have an inflationary effect over time. So what's the impact on you? The impact of tax credits and healthcare subsidies on a normal person paying taxes can vary depending on your specific circumstances. So here are a few potential effects. Number 1, tax liability. If the tax credits included in the legislation apply to individuals, it could potentially reduce the tax liability for eligible taxpayers. This means they may owe less in taxes or even receive a tax refund. Number 2, healthcare costs. The availability of healthcare subsidies can make health insurance more affordable for individuals and families. Now, this could result in reduced out-of-pocket expenses for medical care, such as lower premiums, deductibles, and copays. Number 3, inflationary pressure. On the other hand, if tax credits and healthcare subsidies contribute to increased government spending, it can exert upward pressure on inflation. This means that prices for goods and services in the economy could rise over time, impacting the cost of living for individuals. Thank you guys for joining us today as we explored the potential impact of the Inflation Reduction Act on taxpayers like yourself.